Welcome to Trading Nation. I'm Mike Santoli. The popular Fang stocks rallying on Wednesday along with the broader market. Still, with today's gains, these stocks are still a far cry away from their respective analyst targets. So could this be the start of a massive rally, or is Wall Street still a bit too optimistic on these names? Matt Maley of Miller Tabak and Chad Morganlander of Washington Crossing Advisors join us now to kick that around a little bit. So, Matt, this is former leadership of the market. Obviously, analysts still think these stocks should be worth a lot more. What are the charts telling you?
Well, they're telling us that, I think they're telling us that they're not going to be the big leadership group that we've seen in the past. They should see a nice short-term bounce here. They're getting quite washed out. So that could help them in the very near term. But my concern is that, this group is facing some regulation headwinds next year. And of course, it was a group that was very, very overweighted for a long time and had done very well. But with this big, Facebook stepped in it again yesterday and ticked off more politicians around the globe. And so as they face this headwind, I don't think institutional investors are going to go back and go to the big overweight position that they had in the past. And of course, on the technical side, you look at the charts. You look at Facebook, that's broken down well below its 2-year trend line. The same is true for Apple Computer. The same is true for Google. And all 5 of the names have made key lower lows. So I think this is a group that may bounce back. I don't want to say I'm wildly negative, and we're not going to get a return to what we saw in 2000 and to 2002 in the dot-com stocks. But I do think that you're not going to go back to that overweight in the group, and so it's not going to have that big surge that people have been hoping for. And you might want to look at the old tech group or the value tech names for outperformance going forward.
Yeah, so that might be a little bit of a preference shift by the market. So, Chad, from a fundamental point of view, has these declines given you an opportunity to own some of these big growth stocks, do you think, on a valuation basis?
Yeah, well, I would say that the fundamental backdrop of these companies is quite robust going into 2019. Unfortunately, though, I do believe that valuations do matter, and some of these names we would just stay away from. We prefer large cap value over large cap growth at this point. So we would actually overweight the Oracles, Cisco's of the world, and even look at Microsoft as perhaps a growthy, more alternative to the Fang stocks. Like Matt suggested, regulatory overhang is one issue. It's also a lot of these high momentum names are highly synchronized to global growth. And as global growth decelerates or moderates in 2019, this could also play into valuation compression.
All right. Well, a couple of votes of confidence for the favorite tech names of the late 90s there. We'll see if that plays out. Right. Matt and Chad, thanks a lot for joining us today. Appreciate it. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.